Robinhood's first quarterly report since going public just 3 weeks ago, not even, is out after the bell today. Investors will be listening for whether these recent wild trades are just meme stock momentum or based on real possibilities. And they'll also be watching out for any regulatory or legal headwinds. Dan Primack is back with us. He's business editor of Axios and author of the Axios Pro Rata newsletter. Dan, it's good to have you. First of all, do you know off the top of your head, are they actually going to report earnings? Are they profitable?
I don't believe so. I mean, they've kind of given a preview of what we're going to see. So I don't believe they're going to be profitable. The real question isn't so much the Q2 numbers, even though that's what they're obviously reporting. It's, do they change the Q3 projections? They had said that they thought they were going to have a worse Q3 than Q2, but it's possible this kind of rebound in crypto that you guys were just talking about might change that.
So user count is probably the most important thing, as always, with a lot of these new companies. Jim was talking about this a lot last hour, Jim Cramer. What do you think we need to see in terms of trends there? Just signs that Robinhood has been able to capitalize on this moment with the pandemic and even with the way that the stock's been trading to kind of turn the attention and even the stock run up into sticky users.
I think so, yes. I think what you just said is true. Yes, that's what we want to see, or that's what bulls of Robinhood want to see. I think what's important to note, though, when we talk about this from a share price perspective, is it going up and it's been going up today, or is it going down? There's a pretty good case to make that Robinhood's share price is to a certain extent a meme stock. And I know there's some question about that or disagreement on that. But what Robinhood says today and then what they say in 3 months from now isn't necessarily correlated to what's going to happen to the stock. The stock itself seems to be as much a momentum Reddit play as it is based on any sort of fundamentals.
Yeah, it's up another 10.5% today. Obviously, it had some wild swings. It was interesting because the IPO itself didn't go off well, and it was very important to the platform to get its users into that IPO. So they got maybe a little underwater on day one. Then it shot up. And now it's been a lot more volatile. So, I guess we can look back to what's happened with some of the other meme stocks. And frankly, some continue to hold up at pretty high levels. A lot of the others, especially in the SPAC world, have really struggled this year.
They have. I mean, look, compared to most of the meme stocks, not all of them, but most of them, Robinhood has a much more basic's the wrong term maybe, but has a much more understandable business model. It's not a turnaround play where you're hoping, people will come back to movie theaters in a year or 2 years. We know what Robinhood is, but these questions, A, it's got lots of competition. 2, it's reliance on crypto. And then 3, this big thing, which is the payment for order flow issue, which it seems might not be, addressed anymore by regulators. I'll be very curious if an analyst asks about that and asks specifically what role Robinhood thinks its lobbyists did or didn't play in possibly kicking that can down the road.
Well, and to your point, I remember when we spoke right around the IPO, it was the same time that Weber and Traeger, the grill companies, had listed. And you were saying, listen, at least with the grill makers, what their business is going to be in a year or two. But with Robinhood, it's an open question. If the SEC cracks down on pay for order flow, they'll have to find other ways to make money. Well, but like you said, maybe that threat is receding somewhat. Is that the read that you're getting from Washington?
That's the read we're getting. And obviously, devil's in the details on all of these pieces of legislation. We haven't seen any of this yet. But it seems that that's getting pushed back. And honestly, I do think, even though, as I said, I believe the share price is largely driven by sentiment, not by actual fundamentals or rules or regulations. I do think the fact that that's no longer front and center today, as it was when the company went public, has probably helped boost that share price a bit. I'm
going to call an audible here, whatever the term is, Dan. Since we have you, just a few moments ago, CME and CBOE were reported to be possibly in a deal where CME would be looking to acquire CBOE. The reason that I ask is that it's sort of analogous to the Robinhood discussion. We're ultimately talking about, trading behavior and platforms. In the case of CME, do you think they would face any regulatory pushback over trying to complete an acquisition like this? Again, all hypothetically speaking, but obviously CBOE shares are popping on this.
All hypothetically, and I should note that I first heard about this from you while I had my headphones on listening to the last segment. Yes, I mean, the short answer is yeah. Regulators right now are looking at every major deal in every major sector. And I know we focus a lot on tech antitrust. We talk so much about tech antitrust. But the regulators, DOJ, et cetera, have been very clear that they don't only view this as a tech issue, or they don't view consolidation only as a tech issue. They view this across sectors, and financial sectors, whether you want to call that a tech sector or not, is certainly part of that.
Shepard Smith here. Thanks for watching CNBC on YouTube.